As the market pops up on 17th January 2022, the world, led by the Fed Reserve, braces up to face the monster of inflation. And the Indian bond markets have sent a strong message to Reserve Bank of India, forcing a devolvement in the auction of the new benchmark 10-year bond, which perhaps the market has not witnessed for the last 20-25 years. Despite RBI offering a whopping 13.80 paise underwriting commission to the primary dealers, 65% of the issue devolved. And the RBI could also not send any yield suppression message, as the coupon was fixed at 6.54%, a 44 basis points jump from the previous benchmark 10-year bond. And post-auction, the new benchmark bond traded at a discount. In the US markets, the 10-year sovereign yield spiked by 26 basis points during the last 2 weeks to 1.76%, exhibiting strong nervousness against inflation. The US dollar index failed to hold on to the 96 plus levels and is now at 95. Gold rose to $1,822 per ounce, while Brent crude has firmed up to $85 per barrel, despite Oman's attempt to keep the fuel price suppressed. Amidst this, the Indian rupee shed its midweek appreciating trend against the dollar and closed at 74.15, almost similar to last week's closing level. The government's dollar reserves were also almost unchanged at $633 billion. Going forward, rupee is very much likely to attempt getting stronger against dollar in the near term. The Nasdaq remained supported with a marginal drop in the week over week levels, but Nifty rose to 18,255. The volatility in the derivatives market, reflected by VIX, shed 100 basis points week over week and came at 16.56%. TCS has offered a buyback at 4,005, and resultantly, the share is inching up closer to 4,000. Those who consider offering it in the buyback may well think about buying it or covering it back in the secondary market, as the ones who offered it to the company in the last year's buyback at 3,000 must be ruining their decisions if they have not covered it during that time, maybe sub 3,000 levels. With strong rising interest rate signals sitting concomitantly with a bullish capital market, many investors would be left guessing about their next move. It might do good to look at balanced advantage funds and leave their fund managers to do the guessing for yourself. Have an interesting week ahead.